Okay, this is our third video in this brief series here, Friday, August 21st, option expiration. And we're picking up right where we left off. If you recall, we were watching this, on the 15-minute chart, we saw this breakout bar with positive delta, and then we were watching during this bar, and we could identify that the delta was declining as it tried to extend further. Now let's see what's transpired since that time in the past half hour or so. And what we're going to see is one of our perfect patterns for trading, the ones that give us the two highest probabilities. Now, one we mentioned, we've seen many times, if there's a delta reversal on an extreme. We saw that earlier over here on the 8-minute chart. We saw the low as it went down and it made a double bottom, exceeded it by one tick, and on that bar we saw the delta reversal on the 8-minute chart, and we also saw a good pattern on the 4-minute. So now let's look at the pattern number 2 setup, which we talked about on 1, 2, 3s, or attempted double tops or double bottoms. And that's what we're seeing right here. Look at the 4-minute chart right in the middle. Remember, during this 15-minute bar pulling back, that's why we have a 4-minute chart. We can see if we can get a confirming signal intra-bar on the longer time frame. So a 4-minute gives us just under 4 4-minute bars in the period it would take to complete one 15-minute bar. So here we are again, looking at that same time period here on the 4-minute chart. When that that new high was made, completing here at a little before 20 minutes after 2, we saw the negative delta on the 4-minute time frame on this inside bar. And remember, we don't really want to sell those if it's up at a high like this. We don't want to sell them if we're looking to hold the trade at all. Only if you're going to do a very short-term scalp for a couple of ticks, because we almost always will see at some point when a market breaks out, it runs out of gas, and the pullback is usually going to be very small, at least the first one. Now, it's a different story if you get a pullback for 12 minutes like this, and then the market participants attempt to exceed that high that was just made, for example, in this case, and they fall a tick short, and you've got a doji, and now you had that occur on increasing volume, but volume much less than there was on the high bar. So therefore, there weren't any new buyers. It's that simple. And the delta going from this total dominance to just about even on this bar, which is a doji, is a sell signal right there. Now, again, that's why we're looking at the shorter time frames. If you got short right there at 10:26, you got 6 ticks within about 8 minutes, and eventually went down 2.25 points. So that is a scalp, but it was a pretty realistic, easy 4 ticks, however many contracts you trade, and it was occurring at the new developing value for the day. It occurred after a pretty good breakout on such an extreme breakout day. If they've extended it a good 5-6 more points, and it's a straight up move like that, and you see a dramatic shift in the volume and the delta on the retest, that's a lock. You know, that's one of our highest probability volume and delta combination setups. The only one higher is if you get a delta reversal on a high or a low bar. So the retests are also good signals. So this is an excellent example, although it's not the ideal example, because it's we're looking at very slow trading here. It's really pretty low volume on the day, as we're getting close to the close, and on the E-minis we're about 1.7 million. So it's a low volume day, but and whatever volume there was took place right on the big breakout, most of it anyway. And nevertheless, we're in narrower ranges and time frames and everything, but this is still the pattern. This is the second pattern that we like to look for, that we can call the retest pattern. So when you get a retest and the volume is lower on the retest than it was on the extreme of the swing that was reached, and you get a delta that is reversing from that extreme to either even or the opposite direction from whatever direction was on the extreme, then you have a very high probability trade. That's indicating that there are no more participants wanting to enter. There are no new buyers at this high in this example. There are no participants who are willing to pay up to lift the offer, to buy it on an uptick. All of these expressions that people use, the bottom line is there's no one else willing to jump on this thing at highs anymore. So that means the market has to adjust, and the way it does that is it returns in the opposite direction until it finds some support. And that's why we always benefit in those situations, just like we did, if you recall what we were looking at earlier. Where did it stop? Where did that oversold condition play itself out? Let's blow up the 4-minute chart. So this is the value area that developed today, and this lower value has been there a long time. Ever since the first hour and a half of trading. So when the extreme was reached on the morning breakout and the pullback came down, this is the value point, the point at which people came back in to get on this strong breakout trend for the day. So when we had our opportunity here, when we had this double bottom within one tick of a double bottom on the morning low, that was a great signal. Delta reversed, we saw that, and it took a long time, because now what was the resistance, as we've extended a little bit lower, that resistance is holding pretty strong, this point of control that held for several hours during the day. But once the market was able to get above the lowest hours point of control, it held there after it got to a slightly higher value. When it pulled back, it couldn't even penetrate by one tick this point of control that was developed on this lowest hour, and that's where it took off from. So on the buying on this upward breakout, the delta was strong, the volume picked up, everything was fine, but all of a sudden it stopped her at 220 late in the day, Friday, middle of summer. The big money wanted to go home. However you want to look at it, that was looks like the market topped out at that point, and that's what the subsequent trading revealed. And the retest got one tick from the high and gave us the doji. The delta picture was clear. The volume fit with the delta. The volume on the retest was much lower than on the extreme that was reached. We can get a better picture of that. If we scrunch it down, you can see that it was quite significantly less on this bar. So that's our textbook, our second best signal. And volume and delta will give you the best trades every day on turns, of course. And whatever a person can do to decide whether to take a breakout, breakouts are never easy to jump on if you're a value trader. But when you see it break and the delta and volume are confirming it, at least it's going to give you a little confidence to give it a shot, see if to watch the breakout, since it is confirmed, to give it a little more time to develop. And in this case, it developed quite significantly, 101.50 to 27. So a good 5.5 points on that move, and you got a couple points on picking the top, though. It was very easy to do. It was a very clear picture, and it was across the time frames, very well corroborated over here by the 8-minute And the 15-minute, we first started looking at the 4-minute based on what we observed on the attempt to take the 15-minute higher. So even the long time frame can help. So that's it for the week, the day and the week, volume and delta. Put them together in your trading.